Okay, good morning. It's March 15th, and we got about 2.5 minutes before action opens for regular trading hours. On the left here is a 60-minute chart of the ES. I have support and resistance levels drawn in. I do this every day. Every day I'm looking for relevant things that I can put in, like a trend line, right? Support, a support area, a resistance area, a resistance area. If price gets down to this area and on the smaller chart I see strong buying coming in, I'll know why, and I'll probably take a trade because I'm going to get a fade. I'm going to get a bounce off of support. And the same thing for resistance areas. If price comes up here at the 39.4875 area, right around there, maybe below, but right around that general area, and then begins to roll over hard on the smaller chart, that's a good indicator that I can jump in and get a short. And if I'm also looking at NQ and RTY, and that's the NASDAQ futures and the Russell futures. If I'm also looking at those charts and I see them rolling over at the same time ES is rolling over, or vice versa, I get added confirmation to get into my trade. That's it. It's pretty simple. Okay. Now, the thing that I am being more careful about, though, is this year at least, is setting my trades up, entering my trades with a very clear stop loss, having that very clearly set up, and then projecting out from there to establish my target profit exit. And I want to get a profit preferably of 2 times my risk, but it can vary. And it can vary based upon several things. I'll talk about it here as the morning goes along. But there is the opening of the day here, and on my right chart I have a 10-minute and a 20-minute moving average, exponential moving average. It helps me a little bit. Don't think for a minute you could just simply trade crossovers. You'll never make money because there's too many that don't turn into anything. But it also gives me a little bit of added confirmation as to my bias as to what's going on. So I may not keep these up very much longer going into 2021. But right now I'm using them. So I'm just going to have to wait. Right now action is right in the middle of this zone here. And you could also define this perhaps as a range. And I'm looking at this left chart on the hourly. I want to really avoid trading in the middle of a range because that represents price parity. When you have areas like this that are hemmed in with a high and a low, you want to be looking for trades at the top and the bottom. Generally a fade at the top and a fade at the bottom. So I'd be going long at the bottom and short at the top. Or, if you're watching your smaller chart and you see a breakout, occasionally you could take a breakout, but generally you want to stay away from breakout trades. They on average, breakouts fail, and you will lose money trading breakouts on average. Let's see here. I'm going to change the color of my cross here on the left so you can make it a little bit more clear on what I'm doing perhaps. So going into the morning here, about 6 o'clock in the morning, New York time action. We had a significant drop down here. and then boom, came down to this bottom here and held. And so I'll just see. Something I haven't done here is check the news for today. I generally like to use FinViz for that. And so I go into FinViz. It's free. It's no big deal. There's a lot of places you could go. And there isn't any significant news releases or economic reports coming out. And the other thing, and if there was, you want to make sure, if there's a big economic report coming out, you don't want to take a trade, 30 seconds before the report hits. So the other thing I like to do, and that is wise, is look at what happened in overseas markets during the night. So that's what I'm doing right now. And there's lots of places you can go to. They're all free. So you can look at the Asia Pacific markets here. You can look and see mostly they were up. Europe up. So Europe and Asia mostly up overnight. So that can, if everything up is up overnight on overseas markets, then there's a greater probability, of course, of the U.S. market going up. Pretty simple. It's not complicated. So that's it. That's done. And now I'm just going to wait. I am paid to wait. You are paid to wait. If you are a trader, you are paid to wait for your correct setup. For whatever setup it is that you like to take, that you've developed, you're paid to sit and wait and be patient. So that's what I'm going to do. I've been trading for about 10 years, and 12 years, I guess. It took me quite a few years to become profitable. About 7 years of hard work, and there's a reason why only around 2% of people who attempt to trade ever become consistently profitable traders. It's deceptively difficult. So you have to develop a methodology that gives you the right win-loss ratio and right scaling of winning. In other words, maybe for every win that you get, you generally make 3 times as much as you lose, or 2 times as much as you lose, or 4 times, whatever it might be. Maybe you're profitable 60% of the time, and each time you win around 2.5 times as much as you lose. That's the key, and that can take you years to develop a clear, definable methodology that fits your personality and your psychology. And it's tough. It's tough because you can set something up and it'll look great, and then when you actually try to do it, it doesn't work. Or you can have a methodology that you set up and it works for 2 months, and then it stops working. And so you can fiddle and try to figure things out for a long, long time. But you have to have some sort of clear trading entry that's very definable that you can use. I'd highly recommend that you stay away from the online gurus that are charging money, because virtually every one of them is not a profitable trader. I know they may sound profitable, but 3 years, 4 years into my trading journey, I could talk and sound like I was profitable if I had wanted to, and probably sold courses or something, even though I wasn't making money yet. So stay away from people that are charging money. Generally, those traders who are making a lot of money aren't going to want to fool around with, charging somebody to teach them how to learn. It's just, it's not worth their effort. So for me, I've still got a long way to go before I get to where I want to be. But shooting these videos is, for me, an extremely good way to improve my trading. And so putting them out there for people to hear also is great because it's good information, hard-won information, and hopefully it'll help somebody. I'm always available for free. If somebody has questions, feel free to reach out to me because I trade full-time for a living now. And I am scaling, and my goal is to get to be a pretty big trader. So we'll see how things play out. But anyway, right now there's just nothing. Action is very slow, and I'm just simply not going to trade in the middle of a range. There's nothing to trade here, even looking at the smaller chart. Something too that's important to understand is, like, if you look at my videos going into last year, there's plenty of them too where I actually have my trading account up. You can see my live trade going in, and I'm making like $1,000 every morning on my morning setup, and I'm scalping. I mean, I'm getting in and out of things in very short periods of time. It's because of the way the action was that I was able to consistently do that. Everything is different this year, and that's not unusual. Through all the years I've been trading, this is just totally normal, where you have action that behaves a certain way, and then suddenly it changed, and the style of trading that you're using just stops working. And so, what I was doing last year isn't working this year. I'm not taking those quick scalps where, I'm getting, from 7 to 20 plus points with 10 contracts. It's crazy, in seconds. So now I'm, trading in a much more slower, methodical, kind of algorithmic way, which I would almost even describe as kind of, although I am entering the trades manually, they're almost non-discretionary. I'm kind of trading like a bot, which is what's required this year. So that's also not unusual, and it just is what it is. So I would recommend not being a scalper if you're learning, because if you're a scalper, generally you're going to be losing more than you make when you lose, and so you've got to be right a very high percentage of the time. And if you're trying to learn, it's deceptively you want to get lured into that quick ability to make a lot of money. In 60 seconds, you're up $1,000. Problem is, 4 days later, you lose $5,000 in 60 seconds. Or it might not be. You might make money consistently for 3 weeks, and then bam, you have that one day when you're scalping where you lose 3 weeks worth of what you made, and that's very common. So it's much better, if you're learning, to have a clear strategy that you figure out through time, maybe back testing, things like that. That is a non-scalping strategy where you can have a good R to R ratio, that is risk to reward. And there are plenty of traders out there who are very wealthy, who have win rates of 40 to 55% is all. But they figured out a product to trade and a methodology to base their entries on, where maybe they're making 4 times as much as they're losing. I was just listening to a guy on a podcast who was talking about his mentor, and the guy makes millions of dollars a year. He takes about 3 trades a week, and he is very concise on what he has to have to enter a trade. And when he enters big. And he doesn't deviate. He just does that same setup over and over again. And if a week goes by where he doesn't get it, he doesn't trade. He sits. So this is about making money. It's not about having a joyride trading. If you're learning to trade, or if you've been trading for a while, trading's a lot of fun. It's great to enter trades. But the bottom line is, it's about this is a job. So let's keep watching here. So on other screens, I have these same charts for the NASDAQ and the Russell. It's RTY and NQ. And I'm also looking at other futures products that I trade. But my primary focus right now is the it's the S&P 500 futures. So I have to find a situation that I'm willing to risk you know, quite a bit of money on. And so I want to, quite a bit of money for me. And so I want to be very patient. We see this rolling over here a little bit. Here's a 15-minute chart. So what we see here is price came up. This is drawn in on that 60-minute chart too. Came up to this area 3 times. Wouldn't it have been nice to, if I had been out of bed at 4 in the morning and seen this trade, right? Would have been really nice. I would have taken that. 100% for sure I would have taken that trade. Do you see that? Look, that's the kind of clarity you want during the day. That's what we want. So here we are. Now, keep an eye out for potential trend lines. You should see, when you see something like this, look at how there's an angle here that could be indicative of some sort of trend line. Does it go down this way? I don't know. Does it go this way? Don't know. Okay? So you have to look for potential trend lines. You can look for trades that may be setting up, and then they set up right on a situation like this where this could be a trend line. I don't know. But if you get a bounce here, it will be a trend line. So it's too early to enter. Plus, if you're a price action trader, look, you've got potential area of support here, and you've got support here, potential, and you have that trend line right here too. So shorting here would, for me, not be something that I want to do, even though, for me at least, when I look at this, it looks like, okay, we've had twice action has come up and tried to break through resistance. It's failed. Now, what is it going to do? Generally, when you have 2 failures, the market, or when you have 2 failures at a particular area, action will generally reverse then and try to do the opposite, which in this case would be to come down and test this area here. But between here and here, I don't have a lot of confidence in what's going to happen. Action could come back up here somewhere, could come all the way up to the top and break out for all I know. But I don't have a lot of confidence in entering a short here with a nice stop loss. A stop loss that suits my risk tolerance. So keep watching here. Hourly chart on the left, once again, 15-minute chart on the right. Sometimes I'll use 5-minute charts, 3-minute charts, 1-minute charts. Oftentimes, right before, if I say, okay, I want to get into a trade, I'll look at a 1-minute chart to really dial into the best spot to enter that trade.
Order canceled.
I'm not sure if you can hear that. I have my sound turned off. Maybe I'll turn it back on, but I just entered a trade in another futures product that I'm not talking about right now. So we got fair amount of buying coming in the NASDAQ here, 15-minute chart. See the strong bar right here. Keeping in mind that most of the global markets overnight were up. That increases the probability of the US market being up. Increases the probability of this reversing here and heading back up to test and perhaps even break out of these highs. Who knows? RTY is looking fairly weak. So there's a fair amount of strength coming into the NASDAQ. This is the hourly chart. But if you're a trader, do you want to go long here? Does that make sense? If you're a price action trader, maybe if you're trading another methodology, maybe you have a reason for wanting to go along here, but not me. Not me. Not me. And it's because you have resistance right above. Got resistance right above us here, right? At the 1300 level. So, that's. I don't want to be trading directly into resistance or support. Now, there were a few times last year that I was able to do that because just the unique way that action was moving. But now we got some strong selling coming into the ES here. Maybe it's going to make a run at this bottom. Oftentimes when you have on the left chart here, the hourly chart, when you have a clear support area like that, and you have bearish action that's heading towards it, these areas will act as magnets and price will generally come down oftentimes and test these areas. The reason for that is because if I'm a bearish trader or algorithms are functioning, they're going to continue to short and until action gets down to these areas. And if you're bullish, you're going to stand aside until action comes down here, and then you're going to start buying. So that's why oftentimes these spots will be just like magnets. If you've got strong momentum going towards them and price is fairly close to them, you know, but I'm not taking the trade. So perhaps if it was October of 2020, I might take this trade here. I might just short with a target of around 39.25. It's not a horrible trade, but it doesn't have the clear risk to reward ratio that I am focused on right now in 2021. And that also will be how things play out. Once you develop your own clear style of trading, you're going to see other trades come along and you'll be able to observe them, and oftentimes those trades will play out, but you'll stand aside and you won't take them because you're looking for your very clear specific setup that you want to take. So for scalpers, this is a good area, if you wanted to, get a point or two. This is a good spot for it. And the reason for that is you've got this area down here that price is going to be gravitating towards. So you have strong downward action, you have a pullback, and then you have follow through. It's not great follow through though, because look at the bar here on the 15-minute chart. It's a doji, okay? But if you got in up in this area here, you could be out of your trade now. Now you're getting into this zone here where you're going to start to have potential support. But getting in up in this area here, you could have got a point or two. It's completely not what I'm looking for. Also, for those playing this this area down here, getting in, let's see, getting in a smaller chart might be doable. No, So this is a 5-minute chart. So when you see all these wicks at the top and bottom of these bars, look at all that. You want to stay out of that unless you're trading at the extremes. That would be selling at the top. You wouldn't want to be buying at the bottom, right? Because momentum is carrying us down. Action is bearish for the moment. But whenever you see this type of thing, you want to stay out of there. So you could be trading a 15-minute chart, but I would highly recommend before you take an entry, you look at the smaller charts, 5-minute chart, 3-minute chart, just to get a little closer view of what's happening. Because the minute you look at that on a 5-minute chart, it's a landmine field in there. You don't want to be getting into there with all those wicks. Other things that I can observe here on the hourly chart, fair amount of selling in the ES over the last hour. Reaction tried to come up, tried to push up, and then came back down. So you have buying down here, a lot of buying down here. You got a lot of selling here. This is in the left-hand chart I'm looking at. A lot of selling because of that long wick, small body. The reverse is down here where you have a lot of buying coming in. And we know why the buying is coming in down here, right? Because that's a support area. Now I suspect that action will eventually push through these areas and get down somewhere around here and perhaps test that and perhaps even break through that area. And that's probably more the type of trade that I'm looking at taking this morning. What isn't great is the NASDAQ. This 15-minute chart is very bullish. See? Strong bullish action on the NASDAQ, while the ES, I've got bearish action. RTY, I've got bearish action also. There's RTY on the 15-minute chart. So we got 2 out of the 3 indexes pretty bearish. But I'd like to see harmony between all 3 of them. That doesn't mean I won't take a trade if all 3 aren't in perfect harmony, but it just increases the probability of my trade success if they are. Okay. Now, the other thing is when I have clarity and for whatever reason that I think action is going to come down and test this area, but I look where my entry is and I say, well, I don't have the right risk to reward ratio because if my stop loss is here and I only have price going to here, it's not going to cut it. That's okay oftentimes because I can enter when price gets down to this area. I can put my stop loss at break even, knowing there's a decent chance that it's going to bounce and I'm going to get stopped out. But I'm in the trade for free by the time I get down here, right? And if I end up with a 1-to-1 or 1 to 1.5 risk to reward, I can I can take that if I want, which I probably won't do, but you can. Now, I can also zoom in on RTY here, or the NASDAQ, and be looking at this as a fade opportunity. Seeing how weak the other indexes are. So I'm trying to decide right now if I want to enter this left chart. This is a NASDAQ, seeing how weak the ES is, and if you could look at the Russell chart, it looks just the same, very weak. So I'd be basically getting into the NASDAQ earlier, you know, using these other indexes as confirmation to trade, because I see the ES coming down hard, the RTY is doing the same thing, NASDAQ is just coming off the top up here. I just wish I would have been in earlier if I had done that, though. So what I want to do here, I'm going to look at the 3-minute chart on the NASDAQ to take a good gander what's going on here. So this is a 3-minute chart. So you can see action is holding up here, this little area here. And I may get in on the ES, even though we're coming down to support here. Or NQ. So this is NQ on the left. And can you see why I wish this would have come up to the top here. It didn't test that top, but we do have, so we have this swing high over to the left. We have then a lower high, and now another lower high, but we're certainly not seeing follow through. This is why you want to look at the smaller charts, because you can see buying coming in on the smaller chart. That's harder to see on the 15-minute chart. So, and RTY, look, you got buying coming in here too. Let's look at all that. Look at that. Look at the wicks forming right here, like a double bottom. See, buying coming in. Kind of in this area here too. Kind of this area of support. So that could have just been the test of the bottom. And now, excuse me, we may be seeing the bullish action come in for the day here now. NQ on the left 3-minute chart, I'm going to move that back. I don't typically move my charts around like this, but I do for my videos. And even when I'm not posting videos, I'm shooting them for myself. These are for myself, but what I mean is I'm talking to myself more, and I'm not, speaking in a way that is conducive to other people listening. So, a lot of times if I'm on the treadmill or working out on a indoor bike, which I do a lot, I'll pull up these videos and study my thought process. It's very helpful. I'd highly recommend everybody do it. So for people who are playing this range, you know, if you got in long now, your stop loss would have to be down here. So you'd have a 10-point stop loss. So, you know, you're betting on action getting up to around this area here to at least get 1.5 times your risk. Or you could get 1 times your risk, and your exit would be right here. I wouldn't recommend it though, because it's a lower probability trade, because you're buying right into this selling action here as shown by this hourly bar. So you're going long right into all that selling. You see that? It's not just selling either. It's a test. Action came up and failed and came down. So because if this bar with the long candle wasn't there, if this bar wasn't there, and just these bar were, I wouldn't be so concerned about it. But here we can see action actually went up and came back down. And that's what that wick signifies. So action tried to get some traction there, but you can see it's having a hard time. And it looks to me like selling is going to resume, and all the people who went long have taken their profits or they're trapped. So for 47 minutes, I haven't taken a trade in any of the 3 stock indexes. But you can see that I've had to be very attentive to what's going on. I'm looking and analyzing very closely. I'm not checked out at all. It's not like I'm just sitting here waiting to look up at the chart for my trade to unfold. And that's, you know, what's required. You've got to be very tuned in to what's happening and being very observant, very, very attentive. So right now I just don't have any clarity on any direction. There is no direction right now. There was earlier in the morning, you know, 6 in the morning New York time, 4 my time, there was a nice short, but there isn't anything now that I want to put my money into, but I suspect that there will be. So we've got the Nasdaq and the Russell looking strong now. You know, looks like they're going to come up. There's the Russell looking really strong. Nasdaq looking strong also. However, the Nasdaq has reached its high areas towards the top of that range, so this could be a spot where it rolls back over. So we need to get some synchronicity. That's what I'm looking for this morning. They're not really tracking each other very well this morning, which isn't uncommon either. But when the trade opportunity comes along, it'll be very clear for me. So now the Nasdaq's coming down real hard, just like the ES is here. And I'm getting closer to the potential of getting an entry here. I know overseas markets were up, but because of the strength of this downward move here on the left-hand chart, and because of this bar here that where it came up, tested and failed, I think that there is a probably 60% chance that action could break through this level right now. I could change my mind here in a minute, but right now I think that action is going to come down there and test that area and break through. But like I said, 60 seconds from now I could completely change my mind on that. No, now we got buying coming in. So we've got the NASDAQ headed down. We've got the ES. ES seems like now it's starting to head back down again. RTY is going up. I'm just going to watch for a couple minutes here. Turn my microphone off. Okay, I'm back. So there's, I'm bringing another chart over here. There's a lot of whipsaw action. This is the kind of morning that can really cut you up. This is this is a Russell on the left. You can see it's going up. Maybe it's going to come back up and test this area up here. Where would be the next area of resistance? See it? Right here. Right here. See this area here? See that? So now, if the Russell rolls over here, it'll give added probability to the ES breaking through this support area. Then again, if it breaks through this, you'll probably see buying coming in on the ES, and ES could come all the way up to the top here. And here's the Russell trying to break out on the left there. But as a price action trader, you should see this prior swing low and realize that it's going to act as resistance. And it's not a coincidence that it coincides with this area of congestion here on the left. So you have this area here, you came back down and tested that area, and now lo and behold, action is stalling here, and maybe we'll roll over. I have my sights fixed on the S&P 500 this morning, but I'll take any trade. But for me, I have the most clarity right now on the ES. And I have been trying to avoid the NASDAQ this year. It was the only thing I was trading for a good portion of last year in terms of the 3 stock indexes. Almost every trade was NASDAQ. Now almost every trade is not the NASDAQ. Now, Russell's pushing through resistance. So does that reduce the probability of a short trade in the ES down here? Absolutely. Does it increase the probability of a long trade? Yes. For persons who wanted to take this trade, you'd be going long. You can go long now. So it'd be 39.29.50. Stop loss would be down here. So let's say you have about a 7-point stop loss. So say 14 points, 30. So 30, 44, about 43. So you'd be targeting this area up around here if you wanted to get 2 times your risk. So you'd be going long now. Now, where would you put your stop loss? It'd be below support. But then when would you move your stop loss to break even? That's another thing you have a lot of discretion on. And if you're not confident in the trade, you want to get in, you feel like you're confident that you're going to get several points, but then you're not sure what's going to happen after that, You could, let's say, wait till action gets up to this area up here around the 32 area, and then put your stop loss at break even. You'll probably get stopped out, but it's a free trade. Maybe put your stop loss for a 1 tick profit. That's usually what I do. But I'm flat. You'll hear my trade go off when I get in. Let's see. So now, this is your 15-minute charts. The Russell on the left-hand side here is trying to break through that prior resistance area and having trouble doing that. So if this rolls over, it could help the case for bears to jump into the ES for potential breakout. But you can see the fight still going on over here. But just keep watching. NASDAQ is indecisive. It came off the top and now it's not trending. 15-minute chart again. Didn't come up to the prior highs, which adds to the potential, increases the potential for a rollover for action to come down and test these lows and break through them. Because we have weakness up here. Didn't quite come up and touch the prior highs. But right now, I don't know. Just going to have to sit and watch. Anything could happen. This is a good opportunity for persons to fade up here. I'm not taking it, but in the Russell, I would wait for 4 minutes for this candle to finish, or this bar to finish, or you can look at the 10-minute chart. See, is there any opportunities there? No, because that's a doji, so it's a bar that has no clarity. On the 5-minute chart, we can say, there's a bearish bar up here. I'm going to fade up here. Stop loss would be up here, 54. So you need about 8 points to get double your return. So action would have to come down to about this area here, around the 42 area. But I'm not taking that trade. You can also wait for the close of the 15-minute bar. And then right before it closes, go back and look at the 5-minute bar and see if it looks bearish. And then if the 15-minute bar closes bearish, then you could take the fade. I'm not recommending that though. So I wouldn't, if I was live and I was guiding people in trades, I'd say don't take that trade. Reconsider it in 3 minutes when this bar closes. Let's see how things look. So I can only trade for another 45 minutes. I've got an appointment later this morning that I've got to go to, so have to wrap it up here in 45 minutes, and hopefully I'll get a trade in here. Okay, Russell's looking, certainly isn't rolling over up here, not yet at least. It may never. This could continue to go up, and the ES could bounce here. Strength coming into the Russell. I suspect action's going to break through this area and come up. So, if I was looking to go long in the Russell, which I'm not, what do we have here? We have an area that looks like a range right at resistance. So, I would wait for action to come back down and then enter here around the 23.49 level. You can have a very tight stop loss then. Or, and I just do that now, or I look at the 1 minute chart and try to cherry pick the perfect spot. Now, action could just run away from us here. I'm not taking this trade. But I would look for a pullback that went a little bit deeper, and this might have been that opportunity right here to go long. So if you got in there now, your stop loss would have to be down here around the 48, or maybe your stop loss would be about a 47 level. So it's only 4 points away, 5 points. So you'd be looking at a exit of around 61 to get 2 times your risk, which is up here. So 1.5 times your risk can be right around this area here. It's probably not a bad trade. I'm not going to take it though. Now if this breaks out, taking a fade on the ES would probably be a good trade also. So you'd be entering in this area here, just like I discussed earlier. Stop loss would be down here around a 23 area. You'd be getting in around 29.50. Another trade I'm not going to take. I think that the Russell's going to break out up here. Let's go into the 1 minute chart and see what's going on. There's your opportunity to enter, right? Right around here, you could enter. Stop loss, say you set your stop loss down about 47.2. But wait. If I was live, I would say just wait. wait for buying to come in here if it's going to come in. Okay, not happening. So you see how going into the smaller charts can save you from getting into trades that you don't want to be in. Look at that. Very good spot probably to, probably. I think this would be a good spot to short. I'm not taking it. Bar's too big for me. Look and see if I could find a smaller stop loss on a 5-minute chart. You have to wait for the close of this bar, but that's 3.5 minutes away and price could be too far down by then. But if it just kind of holds here, then this would be a good spot to short off these highs. Your stop loss would be a little bit beyond the high of the bar. So this would be your signal bar telling you to get into the trade. If this bar closes 3.5 minutes from now, which is a long way off, anything can happen between now and then, but if this bar finished bearish, you could enter on the close of the bar, set your stop loss a little bit above the high of the bar, figure out what that stop loss is, and then calculate a target of it at least 2 times your risk there. But a lot of times the bar will be too big, you can't get in quick enough. So then you could go to the 3-minute chart and you could enter right now. I'm debating entering.
Order filled.
Okay, I am short the Russell on the 3-minute chart off a confirmed failure at the prior resistance areas. I am short at 2345.7. And my stop loss would have to be up here, 2352. So it's about 6 points. So my target, my exit's going to be 23. It's going to be 23.33 for my target exit. And I'm not super confident with the trade, so I'll be more inclined, right now at least, to set my stop loss at break even fairly quickly.
Order submitted.
So there's my limit order. I'm sorry, my stop loss order. I just entered that. And we'll just see. So once again, let's just go through. Starting on a 15-minute chart, we had resistance. Price came in and started to roll over. This is a 15-minute chart. You can't see it as clearly. Can't see this clearly on a 10-minute chart, but on a 5-minute chart, you see action punching down through here. It's going to come back up possibly and test this little area here before it rolls over. On a 3-minute chart, there's where we can really get more clarity, where we see the resistance area up here, and then we see on the 3-minute chart a nice solid bearish bar here. Now we have the breakout, and now we're having action coming up and test this area. It's because people faded up here. They're taking profits as action is getting into this area here, taking their profits. That's causing a bounce here, and now after they get out of their trades, test this area, there should be selling coming in again and action coming down. So we'll see how things play out. So I'm putting my stop loss in now. My stop loss is going to be 52.6. So it's going to be right above the high of my signal bar. So this is a signal bar. So my stop loss is going to be right above the high of that bar. So it's going to be right above the high of this bar. Say 52.5. How's that? 52.5.
Order submitted.
So there's my stop loss, and my target is pretty far away, so I doubt I'm going to get that, but as action legs back down through here, I'll put my stop loss at break even and be willing to get stopped out at break even. We'll see how action looks as it gets down there. If it gets down there, I could get stopped out and lose money here. So we'll just see. Okay, here we go. Let's see if we could get some bearish follow through here now. So there was a test of the breakout area. I don't like it that the ES is bouncing here. So ES is on the right. Russell's on the left. I need to have this. Pardon me. I need to have this ES on the right here. Need to have some selling come in down here to at least come down and test support down here. It's definitely a lot slower trading than it was last year. I prefer last year, 2020. So I'm short here. I'm just sitting here and waiting now. I think my platform, I don't know if my platform is, yeah, I'm still in, still connected. Something's going on with my my Ninja platform. There it goes. There was some sort of glitch there for a minute. Now action is almost just completely stopped. There we go.
Connection.
Oh, there we go. See, I was having problems with my my internet connection. So nothing I can do here but to just wait. That's what we're gonna do. It's just like you're sitting in my home with me, over my shoulder, watching me trade. This is what it's about. So nothing really exciting to show you. This is just it. I'm in the trade. You know why I'm in the trade, and now just have to watch. Yeah, let's see here. I'll bring the Russell back here in a minute. Step away and turn my microphone off for a minute. So let's go over again what's going on with this trade, why I'm in this trade. Oops, pardon me. I got two RTYs up there. Okay. Let's go through this again. So to begin with, we have very strong downward action overnight. Action then bounced down here. We have double bottom down here, and it kind of correlates to this general area of congestion over here. Now action then bounced up off of this area, then ran into
Connection lost.
this swing low here. I am losing my internet again. Let me just take a little note here. So action then bounced into, headed into this area here, this prior swing low right here. And this area also corresponds with this little area of congestion right here, creating a resistance area. So we came right up into this area and then got a bearish bar, started getting selling coming in, and that caused me to believe that there was a chance that action could then stop here at this resistance level and come back down and test this area. And I went down into the shorter term bars and saw this area here, which was this very clear area of congestion here, that led me to believe once again that this is a really developing into a significant area of resistance. And then when I went into the 3-minute chart, this is the 5-minute chart there now. Then I went to the 3-minute chart. You saw this very strong bearish bar come in right here. And for me, that was my signal bar. And when you get a signal bar, that's telling you, okay, you want to get into your trade now, or you want to look for an opportunity to get into your trade. So I could have waited for a potential pullback into that bar to get into my trade, but I went ahead and took the trade, got in at the lower area of the bar. I set my stop loss right above the high of the opening of the bar. So my stop loss is up here at 2352.50, 2352.50, so right here. Okay. And then my target is 2333, which is all the way down here. So I'm going to draw that in, 2333. 2330. So that would be 2 times my risk if price comes down here. Now, that's a long way down, so I don't know if that's going to happen, but I can always choose to set my stop loss at break even if price gets into this area here. And now I just wait. Slowly, slowly, it's rolling over, huh? So The next test is going to be the bottom of the signal bar down here. Need action to break through the bottom of that. Then it should accelerate. But whether or not it comes all the way down here probably isn't going to happen. I'm probably going to end up setting my stop loss at break even and getting out at break even. But if this plays out, you know, be nice. Here's how the trade looks on an hourly chart. So can't see as clear. They're really, you can see why I'd want to exit down here because it's a clear bottom down there. But the clarity for the entry isn't so great on the 60-minute chart. You really can't tell, well, why would you short here? You know, why would you short here? And why would you get out here rather than above the high? So sometimes things don't, you don't have the clarity on a 60-minute chart, and sometimes it's the other way around, where you have a real clear entry that you can see on the 60-minute chart that you can't see on the smaller charts. So I'm short 7 contracts. I'm up 0.7 right now. I'm not super confident about the trade because it took a while to roll over. And so I have my stop loss ready to set at break even when I think it makes sense to do so. Man, that could be very soon, because if you look at this, what could happen here is you can have a channel that sets up. So as soon as we get down to this area here, action comes all the way back up. So, like I said, I think I'll get stopped out break even on this trade. See, and action, when it broke through the bottom of my signal bar here, here's my signal bar, this big bearish bar. What happened when action broke through that bar? Buying came in. See the tail on that bar? So I don't like that. I want that to get filled in. I want action to come down here. I need some strength. I want to set my stop loss at break even so I can be safe. 7 contracts. So, you know, I need some bearish action to kick in here, just at least to let me set my stop loss at break even. So if buying comes in right here, I'll know why. Now the NASDAQ is, I'm looking at my other screen here and I can see, oh, that's kind of nice. There's the NASDAQ. Got selling coming in on the NASDAQ. That's good. And ES is still toying around with this support area down here. Still hasn't come down and tested this area, and I still think it's going to do that. Well, there we go. As soon as I started saying that, it came down. I think it's going to come down and test this area here because of the magnet effect that I talked about earlier today. All right. Now we got something going on here, maybe. if the ES breaks through support here, this sucker is going to go all the way down. And with 7 contracts, is a very big trade for me because I'm up just this little move here, just to show you where I'm at here. 23, 45, 70, 45, 70. There's my entry spot. So with 7 contracts, you know, it's $385, just this little move right here. So you can project down here to see it's a pretty significant trade for me. But here we go, buying coming in again. It's taking a while to roll over, but I think it's going to. I think it's going to at least come down, you know, at least come down around this area here. Now, so it's very important to think when you're trading like this, to think in terms not of money, but you need to think in terms of what your return is relative to your risk. So I'm up almost $2,000 now, but I'm not up even 1.5 times my risk. So taking these types of profits will actually cost me money in the long term. I need to get at least 1.5 times my risk. 1.5 times my risk is right here. Okay. It's a long way to go yet. So, but I am going to set my stop loss at break even. So I'm taking my original stop loss off, and
Order submitted.
so I have a new stop loss. It's 1 tick in the green. I've got very good follow through here with the ES right now, so that's good. And what I will do is I will take, if I get lucky enough and am able to get 1.5 times my risk, I'll probably take some contracts off there. 23.32.1. Let's get this out of here. There's still a very good chance that I'll get stopped out, break even on this trade. And you cannot look at that as a bad decision. I can't look at that. Let's say I were to get stopped out, break even right now. I'm up $2,300 right now. You can never beat yourself up and say, I could have had $2,300. And instead I let myself got stopped out, break even. When you're trading like this, in an algorithmic way of trading, basically a non-discretionary way of trading, you have to trade based upon your risk to reward ratio. And it's an illusion to take those profits early. Okay? So what I will do, so I got 7 contracts short. I will take 3 off if price comes down to 23.35.6. So I'll enter that, 23.35.6. I don't chart trade, I know. Maybe it's because I'm old. I don't like chart trading. I can't stand it. Okay, so
Order submitted.
So now I will take 3 of my 7 contracts off at 1.5 times my risk. And I could change that, particularly if the ES continues to go down. And the ES is looking really good right now. It could be a great time to short the ES right now. I have a very large American Bulldog, if you hear snorting and breathing and so forth in the background. That's him. He's kind of watches over me when I'm trading. Okay. American Bulldog, they're not the English Bulldogs. The English Bulldogs are little squatty ones with the short legs and thick bodies. English Bulldogs have long legs. They're real tall, big, broad-chested, very protective dogs, great watchdogs. Okay, here we go.
Order filled.
Nice. So I took 3 contracts off, and that is exactly $2,000 in profits there. I'm up $1,900 in the balance of it here, and let's see if we get lucky and it comes down here. Another thing I can do, this is a 3-minute chart. When this bar closes, I can do different things. You can be creative. I could set my stop loss for a tick above the high of this bar. I can say, well, if action goes above the high of this bar, I'll go ahead and get out. Or I can keep it at break even all the way up here. Let's see. Just see. I'm supposed to be done trading here. I got an appointment. So let's look at the 5-minute bar. See if there's anything else I can see there. Yes, it's still looking good. So people are going to start taking profits, and it's interesting how they so often coincide with my exits. In other words, there's other people, other algorithms and so forth trading. They're taking 1.5 times their risk in profits right now, and that's why you're seeing action, buying coming in here now. Let's see, there should be follow through. It's because the ES is really rolling over, but Nasdaq is going down too, but it's at a support area. All right. I'm going to go let Big Nate the Bulldog out. Be right back. All right. Looking good. So I'm going to set my stop loss right above this bar. If action reverses and goes above this bar, it's pretty much dooms the trade, I think. 23.39. 23.39. Don't ever think that action can't reverse very quickly and surprise you. And see, I forgot to adjust my stop loss for the correct number of contracts since I already exited. So there we go. We're good.
Order canceled.
Very nice. Yeah, so I actually had a trade error at the end there. I lost a couple points, or a couple tenths of points. So, but anyway, there's the trade. That's how it played out. And it was a long, arduous morning, but a big trade and a big morning. It's $4,000 in profits booked. So I'm going to close it up for the day here. I got an appointment, and if you have any questions, please let me know. Listen to this whole video. Listen if you're learning. Listen to the entire process of everything I'm going through, chart by chart, moment by moment, looking at everything to come to the conclusion to finally lead me to get into my trade. This is what it's all about, This is why trading is not an easy thing to do. This is a 2-hour recording. Hope you have a great day.